Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Tesla Battery Day got underway just about 15 minutes ago. We will bring you there with the very latest. Meantime, stocks climbing after a market sell-off powered by tech names like Amazon, Apple, and Peloton. Tesla was down most of the day on the back of CEO Elon Musk tempering expectations about the long-awaited Battery Day. We will bring you the very latest as that gets underway. Musk warning ahead of it that any battery production will be difficult to scale. Hype about Battery Day helped drive Tesla shares up over the last 2 months. Joining us now to break down the day that was, Bloomberg's Abigail Doolittle in New York. Abigail, I know Tesla was one of the ones you've been watching. Talk to us about the market rebound, though, with tech overall.
Well, never a dull day, Emily, because earlier on, around the time of the open, we had stocks higher, then lower, fluctuating on very wide swings. But what we saw at the end of yesterday, which was a nice rebound for Apple, yesterday Apple closing up by 3%, continued into today as those dip buyers of the mega cap tech names showed up once again. This, of course, after the big sell-off that we've seen this month. So a lot of this seems to be technical selling, because today we have Apple closing above its 50-day moving average. A couple weeks ago, I was so impressed when Matt Malley of Miller Tabak came on and told you that Apple could easily correct by 20%, but it would be completely healthy. And the charts supported his view. Now, we basically have had that sort of a correction. Whether or not the selling pressure is all done is to be seen, but technically lots of impressive stuff going on. So that led the NASDAQ 100 to climb 1.9% on the day. And it wasn't just Apple. It was also Microsoft, so these big tech names. The biggest winner on the day, though, Emily, truly impressive, Amazon. Its best day in 2 months, up more than 5% amid lots of headlines. Now, GameStop is saying that they're going to come out with a competing product to Amazon. Investors of Amazon clearly don't care. GameStop did pretty well on that news, though, the possibility that maybe the ship will be turned around there. But take a look at Peloton. That stock down sharply earlier, down just a little bit now. But of course, Amazon today not just announcing their Prime Day for October 13th and 14th, but they, Emily, are also announcing a Prime bike. Now, it's been developed with Echelon. It's about $500, available only to Amazon Prime users. I believe it's their first foray into organized exercise, but anything that Amazon takes on, or many things that Amazon takes on, really seems to work out well. So Amazon shareholders liking that a lot. And speaking of the technicals, Emily, that stock bouncing beautifully off of its 100-day moving average. Those technicals, a fancy way of saying the near-term buyers that liked Amazon and Apple and Microsoft a couple weeks ago, they like those stocks again.
Also, GameStop, a big mover there. Big news in the gaming industry over the last couple of days with Microsoft buying Bethesda Softworks, the maker of a number of popular games. Also watching Tesla Battery Day, we've seen a number of shareholders thus far present remotely, a couple of board members also speaking remotely. Abigail, Tesla shares ending the day down almost 6%, though, on the back of those Elon Musk tweets we touched on yesterday. Was his sort of tempering of the optimism really the main driver there?
Probably so, Emily, but the amazing thing about this, a 6% down move in Tesla, it almost doesn't register. And the reason I say that, out of the March lows, this stock is up more than 700%. That's the degree, the froth that we've seen, the frenzy to buy the shares of Tesla. So a 5.6% decline on the day, yes, probably having to do with Elon Musk yesterday saying that whatever great thing we announce at Battery Day tomorrow, it's probably not going to be in any of our cars or vehicles until 2022. So, a big piece of the rally this year, or a piece of the rally, I should say, some excitement around this Battery Day. But overall, that huge rally for Tesla on the year, that has much more to do with the Elon Musk factor. It has to do with the fact that they're profitable. It did have to do with the fact that they were possibly going to be in the S&P 500. Of course, that did not happen more recently. But that's the bigger story in Tesla, that huge rally. The question is whether or not that needs to come in more too far, too fast. You could certainly make the case that it is. On the year right now, Emily, Tesla is headed to its best year ever. Can those gains hold? We will see. It will probably have more to do with the broader market sentiment and whether or not a big momentum stock like that should continue to have the momentum irrespective of what the fundamentals are.
Absolutely. Bloomberg's Abigail Doolittle, thanks so much for weighing in there. I want to stick with Tesla at Battery Day now and bring in Garrett Nelson of CFRA, who covers the company. Garrett, so far, just some shareholders presenting various resolutions on arbitration, on voting rules. Kristen Hull, a big Tesla shareholder who joined us a couple of weeks ago to talk about a shareholder resolution she would present, has spoken. What is your reaction to Elon Musk's tweets ahead of this, saying basically it's going to take us a really long time to scale this battery production? We're going to see major production challenges, and 2022 is really the year.
Sure. Well, thanks for having me. I think it's really a reflection of Elon Musk trying to temper some of the hype heading into this day, which has been delayed a couple times. And this event comes about 5 months after it was originally scheduled to be held. So, there's in our memory never been more hype heading into one of these investor days that they've had. So, I think he's trying to temper, some of the enthusiasm surrounding it. We do think they will be unveiling a 1 million mile battery very shortly, which is a battery that's capable of exceeding the drivable life of a Tesla vehicle by a wide margin, which we think will really enhance the value proposition of owning a Tesla and further solidify their dominant market share in electric vehicles. Now, Tesla vehicles accounted for 58% of all electric vehicles sold in the United States last year. That's up from a 14% market share 5 years earlier. So, we think we're going to hear more about, the innovations on the battery side, reducing battery costs, and also, some longer term growth plans.
Now, all of what Musk announces today will impact the production of the Semi, the Cybertruck, the Roadster. Prototypes of all of these have been unveiled, but we are still waiting on production. Talk to us about how what we see today impacts the line of cars that are available to consumers in the near-term future.
Sure. Well, longer term, the electric vehicle story, there's a big problem if you start looking out a decade or so in terms of raw materials to create these batteries. So, Tesla has clearly done a lot of work in tandem with their partners, Panasonic, LG, and a Chinese company called CATL, where we think they've really had some breakthroughs on the battery technology side. We think, the presentation will be highly technical, but I think they're going to go through, some of their developments and also their plan to start ramping up battery production in-house, which will really make a difference in terms of driving down their costs and give them a further advantage in electric vehicles over the competition.
So more shareholder proposals happening right now. At the moment, they're talking about human rights issues. Let's talk about your outlook for Tesla in the middle of a pandemic. On the one hand, obviously, you've got a lot of people who've lost their jobs. We are in an economic recession. On the other hand, if you want to go anywhere, you don't want to get on public transportation. You don't even want to necessarily get in an Uber. What is your outlook on just how many cars Tesla will sell over the next year?
Sure. Well, we have a buy on the stock and a $500 price target right now because we're really hard pressed to find a better earnings growth story in the entire market, certainly in my coverage universe. So, it's one of the most robust earnings growth stories we think that's out there over the next few years, and it's really not dependent on the macro. It's really a secular growth story, and the secular growth story is the growth of electric vehicles that we think will happen this decade. Last year, electric vehicles accounted for less than 2% of all the new vehicles sold in the United States. We think by the year 2030, that percentage increases to about 20% of all vehicles sold. And Tesla is the market leader. Tesla is the way to play that long-term secular trend. And we also think in addition to the S&P 500, it is only a matter of time. So it's an eventuality.
So you think that is going to happen, because it seems shares were also taking a hit because that didn't happen. We thought it was going to happen a couple of weeks ago, and the moment came and went.
Yeah, so I think they'll post another profitable quarter. in Q3 and again in Q4. There's little that we can see that would really derail that to cause them to post a loss. So we think it's just a matter of time. And so that's still a catalyst that's ahead, because we think that prompts a whole new wave of buying by ETFs and index funds.
All right. Garrett Nelson of CFRA. We're going to be watching the headlines coming out of Battery Day by the minute. We will bring you any updates as we have them and talk about this a little bit more later in the show. Coming up, can TikTok meet the demands of both the U.S. and Chinese governments? The answer increasingly seems to be no. We will take a look at the latest from Washington and Beijing. This is Bloomberg. When President Trump gave the TikTok Oracle deal his blessing over the weekend, the conclusion to this saga seemed near. But a resolution appears far from firm. Chinese owner ByteDance said it would maintain 80% control of the company. However, Trump touted the U.S. would gain full control. With us now to discuss how the math clearly doesn't add up is Graham Webster, Stanford New America DigiChina Editor-in-Chief. Graham, thank you so much for joining us. So no surprise, the math doesn't add up. No surprise, President Trump is saying something different from ByteDance, saying something different from the Chinese government. What do you think is actually going to happen here? Will there be a deal or no deal?
Well, that's a big question, and I frankly think it's unclear yet. But the stakes are enormous for TikTok because they could still be blocked completely in the United States. So I think it's pretty likely that they'll come to some sort of deal, in part because it's clear that Trump would like a deal to happen. He just wants it in a way that he can brag about in terms of U.S. control, or even there was a report that the deal might result in $5 billion put into his patriotic education plans.
So talk to us about what is at stake here. Obviously, we've seen an increasingly frosty and hostile relationship between the United States and China. This is all happening ahead of one of the most critical elections of our lifetime. What are the stakes?
Well, I mean, at the starting point, this is really the United States changing its opinion about the global internet and saying we're going to try to claw control of companies that operate in the United States away from their foreign owners. And in U.S.-China relations, that's a longstanding issue because of the social media blocks and the other internet blocks on the Chinese side. But if the U.S. continues to go down this road of really enforcing sovereignty over social media platforms and other businesses, it's huge. And it would lead to a continued separation of the broader technology markets and ecosystems between the two countries, which have been so integrated over the last few decades.
Now, you have a great piece out in the MIT Tech Review talking about the real national security concerns. And you make a point that even if U.S. citizens are using American apps, our data could still very easily end up in China. Can you explain that?
Right. So, I mean, the U.S. has very little regulation in terms of data security and personal data privacy. That means that all the major apps and a lot of the minor ones actually collect a huge amount of data from our phones, including some of this location and device ID, and it's used for profiles in the ad economy. It makes it easier to target consumers and to reach people. It also worked for someone like Cambridge Analytica to target political influence. So that market for data is very murky, and it's hard to tell who's buying the data from whom. And there's no reason to believe that Chinese intelligence wouldn't be out there on the market buying up data sets. You know, shutting off TikTok and WeChat, which is the other app that's discussed, would shut down one avenue for potential surveillance, but it certainly wouldn't address the broader privacy and security question in the data economy. We need bigger solutions for that.
Now, as somebody who's covered China for a very long time, do you think that the Chinese government and a massive Chinese company like ByteDance are really going to give the U.S. control of such a major asset?
I don't think that they're going to allow total control. There's new regulations out of Beijing that updated the export control regime in China, and it specifically gave the government power to block export of important AI algorithms and related technology. It's clear that they might want to use that provision to stop the U.S. from getting control of the TikTok algorithm. Now, is that a national security thing for China? Not necessarily, but they do want to keep strong companies domestically, and handing it all over, I don't think is going to be a winning mission if that's the final U.S. position.
So what are you going to be watching for in terms of what happens next?
Well, I'm just riding the wave here. I think, the companies these are massive and careful companies. Oracle's been around for a long time. ByteDance is new, but they work hard to run a profitable business. They're running a deal that's inflected by political winds that are out of their control. So I don't think even they know where it's going to end up. And we're just going to have to watch. But we can't forget that it's tied up in this political season. And I think that's what we should all remember going forward, because there are privacy and security problems having to do with user data. But whatever happens here from the U.S. side, we still have to address those.
All right. Well, we'll continue to follow the twists and turns as the saga continues to unfold. Graham Webster, Stanford New America DigiChina editor-in-chief, thank you so much for joining us. As we've been speaking, Tesla CEO Elon Musk has taken the stage at their battery event. Again, this is all happening remotely. We can see cars parked outside the Fremont factory, cars honking in support of Musk. He cracked a little joke saying they've got the Tesla drive-in movie theater, basically. He's been talking up the factory in Shanghai, saying that it'll get to producing 1 million vehicles a year. Huge cheers from the employees of the factory in Shanghai. He's also talking right now about the Model Y, saying it's the smoothest launch they've ever had. We're going to continue to listen in here. Musk talking about the Austin, Texas plant as well, saying that'll make it cheaper for Tesla to ship cars to different parts of the United States. We'll be listening in, bringing more headlines as we have them. Coming up, meantime, a giant household name encroaching on Peloton's turf. The cycling sensation now has a new rival. We're going to have more details next. This is Bloomberg. Apple launched new Apple Watches and iPads last week, despite most staff working from home. And we're expecting new iPhones to be unveiled next month. In a Monday interview at the Atlantic Festival, Apple CEO Tim Cook praised employees' ability to operate remotely over the last 6 months.
We've been primarily remote since March, and so we've got 6 months under our belt now. We're still learning. I would say that I'm incredibly impressed with our teams and their resiliency.
For more, I want to bring in Bloomberg's Mark Gurman, who covers Apple for us. For a company that is as secretive as Apple has been about its production, about the way it works, it's pretty incredible what they've been able to accomplish with employees working from home and how positive Tim Cook is about the experience. Mark, from your conversations with sources inside the company, how is it actually going?
Yeah, my take is that a lot of the products that have been launched this year, or I should say all the products that were launched this year, have pretty much been finalized well before the pandemic struck, right? The design of the iPhone launching in October was likely complete by, October, November of 2019. Likewise with the feature set for most of the software and the watches and other products launched this year, and probably into Q1 of 2021. So what we're seeing the employees doing from home is basically the final touches, final testing of those products. The employees who are actually working on next generation devices, for the most part, are already back in the office on a very limited scale, wearing masks, of course, still operating machinery, but less people, being around, people coming in at designated times or hours of the day or the week. The interesting thing is going to be to see how far this sets Apple back 2-3 years down the line, if things are going to be slower in terms of releasing new devices because of the slowdown of the ability to develop new products at this point.
Interesting. There seem to be two schools of thought among leadership emerging, where you've got folks like Tim Cook saying this is great, we can keep doing this, we support this. On the other hand, Microsoft CEO Satya Nadella has said we're burning up social capital. Imagine starting at a new company at a time like this. And I also spoke with Netflix CEO Reed Hastings, who also said he wants people to get back to the office. Take a listen to what he told me.
The technology of Zoom and Google are good, but it's not yet the same as being in person. So I'm sure, like most companies, we'll have more people spending more days from home. But for me, the human contact and the interaction you can do in trying to understand some challenging topic is great to be in person.
You wonder, Mark, if we're going to start to see some CEOs dramatically change their tunes as the environment and certainly the health environment changes. I do want to turn to another story now about Peloton, a challenger from perhaps an unlikely source, and that is Amazon. Talk to us about this new potential bike from a competitor.
Yeah, so at $500, this bike is one of the lower cost bikes from a major technology maker. I mean, obviously, this is 1/4 the price, even cheaper than what Peloton is selling. But this is really a bike made by Echelon with the Amazon branding and Amazon partnership on there. This is not really developed by Amazon. I think they're exaggerating a little bit by calling it the Prime bike. That's my honest opinion. But let's see how well it does. Obviously, Peloton has such a loyal fan base and user base and shareholder base, where I personally don't think this is going to have an impact, especially in its current form, despite the pretty low price comparatively.
All right, Mark Gurman, who covers Apple and Peloton for us. Thank you so much, Mark, for joining us. We do have some breaking news now. Palantir, which we've been expecting to go public any day now. Bloomberg now reporting that Palantir shares will start trading on the New York Stock Exchange on September 30th. That's a day later than we had expected, but we did expect this to happen sometime next week. Palantir, as we understand it, pursuing a direct listing, so different than a traditional IPO. We will, of course, be all over it. And Elon Musk still speaking at Tesla Battery Day. Shares have been moving up after hours. Musk had tempered expectations about today. Going into this, we are listening to all the headlines, and we'll give you a deep dive after this quick break with Pierre Ferragu of New Street Research. We'll be right back. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Tesla shares moving up after hours. Elon Musk on stage at this very moment. At the company's Battery Day, the company has been pushing a message of sustainability so far at this annual meeting, and Musk making some ambitious proclamations as per usual, saying the factory in Shanghai is on pace to make 1 million cars a year. We've got a whole team of reporters covering this. You can check out their minute-by-minute analysis on the Bloomberg at T Live. Our autos reporter Craig Trudell saying that Musk's claim that Tesla will one day produce 1 million vehicles a year in Shanghai, wildly ambitious and a classic Musk stretch goal, given that they only reached cumulative production of 1 million cars as of March. Pierre Ferragu of New Street Research, who currently has a neutral rating on the stock, joins us now. And Pierre, Musk is anything if not ambitious. What is your take so far on what we've heard?
So we've heard very little so far. So I wouldn't take anything major. And I think the one thing I would refer to is probably the tweet Elon Musk sent out earlier today or last night, where he basically laid out that most of what we're going to learn during this Battery Day will be looking out several years away from here, and that's how things got started. I think if you take a step back and you look at where Tesla stands today, what I would say that the company is at the top of its game. They have like a massive competitive advantage on their technology. They have batteries with a better range, with lower costs, with a better performance. And so what we want to hear today is, of course, how does the company maintain and defend that competitive advantage over several years? Because what you see around Tesla is that traditional manufacturers are progressively getting there, even if they are still like way behind Tesla on electric powertrains. Then you see like a handful of decent startups that seem to be putting together technology the right way. So they're very small, they're very early, but they're getting into the market. So a lot of people are going after Tesla, and the question is, how does Tesla maintain the lead? And I think what we've learned from battery technology over the years is that battery technology is not a place where things change overnight. It's an improvement that gets delivered over the years, and that's what we're going to hear about today.
So why just a neutral rating? You know, obviously we've seen shares soar in the run-up to this. Musk tempering expectations. We saw a bit of a decline over the last 24 hours. Now shares going back up again. What is the skepticism in your neutral?
Yes, you know, when you rate a stock, you can take a lot of different perspectives. It's never like a single answer kind of situation. So when we initiated coverage on Tesla a couple of years ago, a bit more than a couple of years ago, our view was in 2025, Tesla is going to be the scale of BMW. Tesla is going to be more profitable than BMW, probably twice more profitable. And Tesla would be a growing company with still a lot of upside opportunity and you know, optionality beyond cars in the insurance business, in the energy storage business, et cetera, et cetera. And so when we laid out that 5-year view, like that was at the time a 7-year view, and now it's a 5-year view, I think we still have this picture in mind. And if you look at a fair price, you know, at a fair valuation for a picture like that, that puts the stock around 2005. Sorry, I'm still talking older shares. So here, like $500 to $600. And the stock, like, you know, hovering in the low 400s today. I mean, if you buy a stock 400 today, hoping it gets to 600 in 5 years, that's fine. You're going to make money, but that's not a great investment. So that's the reason why we have like a neutral perspective on the name. And of course, and then you have to think.
We're looking, Pierre. Hang on a sec. We're looking at a live shot of all of the Teslas parked outside the factory in Fremont, California, where the meeting is happening mostly remotely. You're seeing drivers and shareholders getting out of their cars and stretching their legs there. They're on a break right now. Some of the other headlines coming out of this, Musk saying a beta version of a full self-driving autopilot feature will be released in about a month's time. You know, there's been ongoing controversy about autopilot, especially a full self-driving version of it. What is your take on that?
So my take on that is that on average, he's like 3x too quick in the way he looks at the future versus what happens. So maybe in 3 months we get it if you promise it for the next month. And then you have to be very clear about what, you know, like a beta version of a full driving service would be. That's going to be a software that gives your car the ability to drive through, on paper, any sort of situation. But it's just going to be on paper. It's going to be a service, like a feature in your car that will still require your maximum attention as a driver, okay? So then the key question is not, you know, is it going to really work or not? Because if you define really well the car can drive by itself and you never take care of it, that's not going to work. If really works mean people really enjoy using it and find it makes their driving more enjoyable and safer, then it's probably going to work. And then the key question to me is, when do people, you know, see the value in the product and see a price that is going to match that value? And that's going to be the very exciting, you know, next couple of years on Tesla, like going through pricing discovery, probably moving away from selling the service for a one-off $8,000, but maybe moving into a monthly subscription so people can use it. And then discovering really how people enjoy it and start, you know, talking about it around them, becoming like promoters of the service. And then, of course, if that becomes successful, it's a significant game changer for the economics of Tesla, because whether you get it as a one-off charge for the driver or a monthly subscription, it can boost by 50% the profit per car if we reach like very high adoption.
Pierre, we can always come to you for in-depth analysis. Thank you so much for joining us. We're going to continue to listen in now. Pierre Ferragu of New Street Research, thanks so much. Once again, Elon Musk said about this event and what they're about to announce today, I think it's going to actually blow your mind. It blows my mind, and I know it, so it's going to be pretty cool. We're waiting for more announcements. We'll bring you more headlines as we have them. All right, coming up, we're going to take a look at what antitrust regulation might look like under a Biden administration and why things could potentially be very different for big tech if there is indeed a blue wave. That's next. This is Bloomberg. President Trump has taken a hard line on big tech despite his frequent use of social media and campaign advertising on Facebook and Google's YouTube. But what if Biden wins the election? What does that mean for the antitrust scrutiny facing big tech platforms? Jennifer Rhee of Bloomberg Intelligence, our senior analyst for antitrust litigation, joins us now to discuss. And Jennifer, you've been doing some in-depth analysis of this. And I should point out that big tech is facing scrutiny from both sides of the aisle and lawmakers in Congress from both parties. So if Biden wins the election, will it really have that big an impact on this antitrust scrutiny that big tech is facing now?
You know, I think it could have some impact. And you are right. There's a bipartisan interest here in curbing the power of big tech and maybe doing something with the antitrust laws. But I think, you know, the biggest hurdle right now to do anything to tame the conduct of any big dominant company right now are the courts, because our precedents are set up in such a way that they're really defendant-friendly, and they're very difficult even for a generalist judge to sort of suss out and figure out, and the tendency is to err on the side of caution by a judge and not rule that a company, you know, is a big monopolist or needs some sort of a drastic remedy to fix the problem. So antitrust legislation is something that's likely needed if there's any kind of real reform to be done, and I think a real ability to go after any of these companies. And, you know, there are quite a few antitrust bills right now that have been put out there, mostly by Democrats, that are still in committee and have a long way to go. But if we have Biden as a president, and, in fact, if we have a Democratic sweep of both Senate and the House, I think that these bills have a much better prospect for actually moving through the process and becoming law. And some of them really will change the way we evaluate anti-competitive conduct in the court today.
So, interesting. You're saying that big tech companies could have even bigger problems if Biden is elected?
I do think so. And, you know, for a whole nother day we can talk about it. I also think because of changes at leadership, at the top of the leadership at the FTC and DOJ, it could be tougher for big tech as well under Biden. But at least just talking about this legislation, one of these bills would really change the current precedent that's used in court right now for monopolization cases. And it would make it a lot easier to win a case against an alleged monopolist in court. It would shift burdens of proof. It would make it easier to prove that the company has market power. And it wouldn't require as high a standard of harm to competition as needs to be shown now. There is also a bill that would probably make it a little bit harder to get merger clearance, because likewise it sort of shifts the burdens. Rather than having to show a merger as anti-competitive, it would shift the burden of proof to the companies themselves to show that the merger won't harm competition. So both in the challenge side, if you might go to court to sue an alleged monopolist, or for companies that might be trying to merge in the future, if these bills or some version of them become law, it will become more difficult for the companies.
Meantime, Jennifer, we've been looking at the issues facing these companies in Europe, where regulators have been even tougher on big tech. Nick Clegg, head of global affairs and communications at Facebook, speaking with my colleague Maria Tadeo in Europe on a panel at the European Business Summit, emphasized that Facebook has no desire to leave Europe, but did recently challenge a draft ruling by Irish regulators. Take a listen to what he had to say in response to that.
have absolutely no desire, no wish, no plans to withdraw. Why would we? We're delighted that so many people take joy and find WhatsApp and Instagram and Messenger and Facebook useful and crucially.
Now, Clegg, pretty forcefully there, batting down a question about whether Facebook has a desire to leave the EU. But what do you make of the challenges that these companies have faced in Europe, which arguably have been, even more difficult than what they faced here in the United States? Quickly, we've got about 30 seconds.
Yeah, absolutely. And I think they're going to continue to face challenges in Europe. But the European approach so far has been, Emily, just to fine these companies. And I don't really think that had a very large impact on them. And while they continue to just fine the companies for wrongdoing, I'm not so sure that that's going to have the greatest deterrent effect.
All right, Jennifer Rhee of Bloomberg Intelligence, looking forward to more analysis from you on this issue. Thank you so much for stopping by. Sticking with antitrust, U.S. Representative Matt Gaetz, a Republican from Florida's 1st Congressional District, talked about his stance on big tech regulation with our own Kevin Cirilli. Take a listen.
I think there are areas of broad agreement that trace the president's executive orders, whether that is relief for renters or whether it is a way to sort of bridge the gap for businesses and even individuals. The problem is Democrats in Congress don't want to give the president a win tens of days before the election. So it's as if we're frozen in place right now, paralyzed by our own politics, when I do think that we could get agreement on business assistance and paycheck protection, we could get agreement on individual assistance. We might have different ways of calculating state and local assistance, but that's only stopping us because of the upcoming election.
You write about this in your book, Firebrand, but I say this respectfully, but you've got to be frustrated even with members of your own party. Because to outside of Washington, we always talk about Wall Street, but on Main Street, small businesses, they're looking at this and they're thinking this wouldn't fly on Main Street if we didn't do our job. So why is Congress able to get away with it?
Congress is fundamentally corrupt. What happens in this town is the exchange of money for favors. Sometimes that money comes in the form of campaign donations. Sometimes people get their spouses and relatives hired to no-show jobs. And that really drives things around here more than the American people would ever tolerate if they saw it with their own eyes. So I lay bare in my book how you have to pay for committee assignments. I paid $75,000 to get on the Armed Services Committee. How people have to donate certain money to be eligible for leadership posts. And I think that on an issue like you described, business assistance, individual assistance, to help bridge the gap to a recovery on coronavirus, it's the perfect example of how the needs of regular Americans aren't being met because this system is so fundamentally broken.
You've emerged as a key critic of big tech institutions, most notably on Facebook. Where do you stand right now in terms of the process of where the Facebook antitrust potentially decisions are going and oversight is going over Silicon Valley?
I'll level with you. Congress is never going to take on big tech because Congress is bought and paid for by big tech. And so if we want to see...
Big tech might disagree with you right now.
Well, I mean, they might disagree with me, but they would have 3 lobbyists to deploy to every single congressional office to pursue that disagreement, okay? And again, if you look at... I write in my book about how relatives of members of Congress get these, no-show jobs with technology companies, and then all of a sudden, those politicians aren't eager to engage in review or oversight. But there is a path forward. In the president's second term, we have the opportunity to reshape the Federal Communications Commission and the Federal Elections Commission. When Twitter and Facebook and other digital platforms are no longer acting as an unbiased platform, I believe the FCC could take regulatory action against them, and I believe the Federal Election Commission could find them guilty of election meddling. And if we just got big tech companies to behave properly, I think they can add a lot of value, obviously, to people's lives. It's when you see them trying to control what people see and what they think so they can control how they act that I have a lot of objections.
And that's American big tech companies. Now we've also got to be talking about China big tech companies. You look at Oracle, you look at TikTok and the developments on that particular deal. How should the U.S., does it only have to come from the executive branch, or should Congress play a role in making sure that national security interests are protected as a result of China tech companies now?
Yeah, I mean, Republicans and Democrats for the last generation tried to sell us on this chimerica dream, and it's really become a nightmare. I write in my book, Firebrand, a chapter entitled "China is Not Our Friend." And China doesn't have an innovation economy because they don't have a free market. So they steal stuff. And they've developed this dual-use technology like TikTok, like DJI drones, like some of their genomics companies that get stakes in the collection of American genetic material. They're using all of that for dual use to facilitate their strategic advantage. I do not believe we are going to make China more like us by drawing them closer. I actually think that we become vulnerable when we draw China too close to us, and that's why I think this president's tough approach is the right one, and I hope it's enduring within the Republican Party.
Representative Matt Gaetz there speaking with Bloomberg's Kevin Cirilli. All right, coming up, LinkedIn has curated a list of the top 50 startups that have thrived during the COVID-19 storm. We're going to hear from LinkedIn about this new ranking next. This is Bloomberg. While the pandemic has battered the U.S. economy with many jobs lost across the board, a number of startups have weathered the storm and actually thrived. LinkedIn is coming out today with a list of top 50 startups that are on the rise in 2020, including a few familiar names like DoorDash, Robinhood, Cameo. Joining us now for more, Jesse Hempel, Senior Editor-at-Large at LinkedIn. And Jesse, there are also some names on here that I think would surprise some folks, some startups many people haven't heard of. How did you curate this list, and who stands out to you?
Thank you so much for having us, first of all. And what this list is really is it's a list of the companies that members are most interested in, the companies that are growing on our platform and that are seeing real momentum. Among other things, every startup on this list of top 50 startups is hiring. These are companies that are really thriving through this very uncertain time.
So what are some of the names that surprised you? I mean, DoorDash and Robinhood, not so surprising, but there were some other companies unfamiliar to even myself, and we cover startups on a daily basis.
Well, I'll point you to two trends, and then I'll share with you some of the companies that really illustrate those trends. One is, we have put this list out for 4 years now, and we don't usually see a lot of healthcare startups on this list. It's difficult for startups. It's hard to get in. Data is heavily regulated. You don't see a lot of healthcare companies trying new things. But of course, this year, Emily, all of that changed. And so what you see is, for example, not one, but two startups that are online pharmacies. They're delivering your drugs to you. And you see companies like Modern Health that are focused on mental health benefits. And that, by the way, that is something that we're seeing a lot of on our list too, the focus on mental health. You also see a company like MindStrong, which is billing itself as a virtual hospital. I'll tell you, Emily, if you had asked me a year ago if I could imagine that a hospital would be a virtual thing, I would have raised an eyebrow at you. But this year, we are increasingly comfortable with telehealth. I mean, I had my physical this year online. And if we're willing to do that at scale, that opens up tons of opportunities for new startups. So that's just one trend.
Now,
Emily,
the big question is how...
Sorry, I interrupted. Go ahead.
Jesse, the big question is how, companies are going to attract talent in a remote work world. And you've got big tech companies like Apple and Facebook that are being, very generous with their benefits, generous with the time that employees can spend at home. And I wonder if startups are going to be able to compete with that.
Well, in some ways, this is where startups are starting ahead, because for a very long time, the big companies have had big salaries to offer and the safety of big company life. And startups for a very long time have needed to compete for the very best talent by offering things that employees want other than money and safety. And, remote work and flexibility has been number one on that list for so long. So this is something that, you saw some of the startups rush to change to figure out how to do that. Like Brex, for example, was a company that everybody showed up to work every day at. Another one would be Brook Linen, based in New York. But nearly every company on this list has rushed to redevelop itself as a remote workplace if it wasn't already. And many of them aren't going back.
All right. Well, it's a really interesting list. Some new names, so you can definitely check that out at LinkedIn. Jesse Hempel, Senior Editor-at-Large at LinkedIn. Thanks so much for weighing in with us today. All right, we've been following the Tesla Battery Day event as we have been speaking. Shares pared back some of their gains, but still up about 4% right now after hours. The company pushing sustainability at this meeting. Again, Elon Musk proclaiming that his Shanghai factory will eventually make 1 million cars a year. Again, a very ambitious stretch goal for Elon Musk. Not unusual. Talking right now about battery design. We're still waiting for the biggest announcements. You can stay tuned to Bloomberg Television for the very latest and watch second-by-second coverage of the event from our team at Live Go. Thank you so much for joining us. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. A programming note, Bloomberg's Equality Summit kicks off tomorrow on Bloomberg Television. It is all virtual this year, but with some huge names, very notable guests, Hillary Clinton, Dr. Anthony Fauci. Do not miss it. This is Bloomberg.